Disclaimer. Any content that appears in Charlando de Minas is not an investing advice. Amadeu Bonet and any of the guests are non-investor advisors. We might have interest in the companies mentioned in this publication. Always assume that the speakers are biased. These episodes are just a journey of my learning in the natural resource investment. Welcome to this very special episode of Charlando de Minas, the Spanish podcast dedicated to the mining investing, today in English. For our Spanish listener, don't worry, this interview will be translated to Spanish and you will have access to all the information in the language of Cervantes. Today we have the pleasure to interview Mr. Bradley Langile, CEO of GoGold Resources. GoGold Resources is a Canadian gold and silver producer and explorer with projects in Mexico. The company is publicly traded in the Toronto Exchange as GGD. Brad, thanks for making time to be here. How are you? Welcome to the program.
Oh, very good. Thank you. And it's nice to be talking to your audience this afternoon.
Could you please introduce yourself and tell us about your experience and background?
Well, education, I'm a geologist, but primarily what I've been doing is working in building mines over the last 30 years and primarily in Mexico. We built 4 mines down there. My function has been CEO in all these companies. And our expertise is not just exploration, but actually, as I mentioned, also building, which requires a lot of capital. And over my career, I would have raised in excess of $1.5 billion of equity capital and done several $100 million of debt financings for these projects.
Perfect. I mean, when we will go through, the experience is perfect for the project that we will talk about and all the development that you are doing here in GoGold. Now, can you please briefly describe GoGold Resources and what is the main objective of the company?
Yes, GoGold is both a producer and an explorer and a developer. GoGold is a company that was incorporated 12 years ago. It trades on the main stock exchange in Canada, and it trades on the QXQB in the United States. We have 2 projects. One is our producing asset, which is a large tailings retreatment project in Parral, Chihuahua, Mexico. There we've been operating for the last 8 years. And in general terms, it produces approximately 2 million ounces of silver equivalent per annum. It has 7 years of reserves left and should be approximately 2 million ounces a year of production. But then the real driver, the real force behind the value of the company right now is our Los Ricos project in Jalisco, Mexico. And that project has been exploration primarily since March of 2019 when we entered into the project. We acquired 26 concessions. Since then, we've drilled over 200,000 meters. We defined in various stages of exploration about 242 million silver equivalent ounces. And we've consolidated additional claims. We're now up to 46 claims. Now we have the project is called Los Ricos, but really it's 2 projects divided by about 15 kilometers in distance, Los Ricos North and Los Ricos South. The last big event was the initial resource in Los Ricos North, which was published about a year ago. And now the focus has turned to Los Ricos South, where we already had defined 82 million ounces of silver, and we had a preliminary economic assessment that showed $295 million of 5% discounted net present value. There is where all the activity over the next year, 18 months is going to happen. There we're now progressing that part of the district towards development. And we would see
Good.
now more ounces we're defining on a new piece that we've added, new economic studies, and we'll be applying in the next months, several months, for a permit. And we hope that by the latter part of next year, we'll be in construction.
Wow, it's a lot of news. I mean, for me, one of the best things that GoGold does is generate value to shareholders because it, in a way, it's producing cash flow with the Parral and it's used in the exploration and development on Los Ricos. And as you said, we can divide GoGold in the two main projects. No, the one is the production of the Parral, where it's an open pit heap leach, and then the exploration story of the Los Ricos. Let's talk first about the Parral. It's a cash flow project where you have a low grade gold, approximately 0.304 grams per ton of gold, and it's producing in the open pit leach procedure in order to obtain that gold. The cash flow income, and you said that is roughly 2 million tons silver equivalent. And you said that you could produce for 7 years, right? More? And there is any hope that you can go higher than that?
Yes, it's been producing in the past for the last past 8 years, and it
Mhm.
has now 7 years of reserves ahead of it. So it should produce for another 7 years at least. And it's you're correct. It's a grade, a lower grade on a silver equivalent, about 0.35. Sorry, on a gold equivalent, 0.35
Mhm.
grams, and it's an agglomerated heap leach. Um, it's the project is very unique in that we've really developed some new technology around the reprocessing of tailings or old mine waste. And this mine waste is located in the center of an old city, Parral,
Mm.
um, and it's around a mine that was mined out over the last 300 years. So the city wants to get this mine waste out of their city. We move it out of the city, we process it. From an ESG perspective, it's extremely good because,
Yeah, it's incredible. I mean, it's
yeah,
waste residue that you take it out.
right. We take that residue out of the city. So, an environmental, we remove that. Um, a partner on it is the city who owns those tailings, and
Hmm.
we pay them every month 75,000 US dollars, which would represent probably about 10% of their municipal budget. And we employ 200 people, so providing employment to the good jobs, employment to the community. So it ticks all the boxes on an ESG perspective. Um, Really, the all-in sustaining cost is about $17.50 per silver equivalent ounce, and we'll be producing about 2 million ounces a year going forward, and we've been averaging around that. So at $19, it's more trading dollars. It's not making a lot of money.
Yeah,
When it
yeah.
was at 25, $26 a year ago, the price of silver, it was paying for everything in our company. It was paying for our G&A. It was paying for our exploration budget on Los Ricos, which is 24 million a year. So we hope that the price of silver comes up and then we'll be back in that.
Yeah, we all hope. We all hope that.
Oh, live in hope. Yes.
I mean, I think that you actually gave me the key for the next two questions, but I will do it anyway,
Sure.
and probably you will just repeat that answer. I mean, because one of the question was that even if your revenue no increased because obviously silver price it was high, uh, production failed to meet expectations, and the market reacted with a big plunge in cotization. Maybe the reaction of the market it was more in terms that all include sustaining cost is quite high, and then silver it decreases significantly.
If you look at Go Gold and you look at the value in the company, and our value is very much underpinned by the fact that we're very much an institutional investor company. We have probably 50% of our shareholders are institutional, and they would look at a Parral, although it is such a great ESG project and it does make us some money. They would really look at the driver as being Los Ricos for the future value of the
But
company. But
but then
yeah,
but then if the driver is Los Ricos and Los Ricos is going really good, and we will talk about this.
Mm.
I mean, the cotization of the company. I think that it was. early this year it was almost $3 or $4,
Mhm.
and now it's two or something like that.
Yeah.
What do you think? Why the market reacted in this way in a company that it's solid in a way that it's producing, that it's having a really excited exploration project, and that you have 50% of the your shares it's institutional.
Yeah, I do believe Parral has very little to do with the decline in value. The decline in
Okay.
value is really more around the commodity price. And if you compare our chart to many of our peers and even seniors, like
Mm-hmm.
I would throw out there an Agnico Eagle or First Majestic or many of those companies, you'll see very similar charts, and that's driven by change in sentiment around the commodity price over since last February March. So that's a lot of the downdraft in our share price and um, almost or all of the other junior producers in our space. Um,
Mm-hmm.
that being said, uh, we're fortunate in that we did raise equity and we have had Parral
Mm-hmm.
assisting us in cash flow over the last several years, couple of 2 3 years, and we're in a very very strong balance sheet position in that we have 75 million US cash in the bank, no debt. So you take a project like Los Ricos, where others might have to slow down their spend, and we don't have to. I mean, we're going to keep on charging ahead and developing in Los Ricos South and getting that closer to cash flow or getting it to cash flow. And we're in a cyclic business. We can't do anything about the commodity price or the sentiment of the market. As a group of
Yeah,
producers.
of
But
course.
what we can do is try to select good projects that are good projects even in a low commodity price. They're less sensitive to that, and that's what we see from Los Ricos project. It'll
Mm.
produce low cost ounces. In fact, the cash cost of those ounces in the PEA today are $8.35 in Los Ricos South. And
Mm.
with what we're finding now, with this new piece that we added on, which is a very high grade, there's a good possibility that it will go even much lower in cost. So we have the flexibility to continue to develop that because of our strong balance sheet, where others might have to slow down. And that will, I believe, propel us,
Make a difference.
make a difference, going to propel us forward when that sentiment around the commodity price changes. And hopefully sooner than later.
Of course.
When that changes, you'll see a Go Gold jump ahead of the pack. The other thing I'd say is, you look at our institutional investors. Well, we have a lot of gold focused, precious metals focused funds as institutional shareholders. They need to put the money somewhere. So where do you put it? We're all down because of sentiment and commodity price. But if you're putting it in a gold, where in Los Ricos South in particular right now, we're hitting really stellar results, and we have such a strong balance sheet, and we're an operating company as well. So we have that talent in our company as well.
Mm-hmm.
Um, it's a very good place for them to park the money. And a lot of them are deciding today because they're not having new inflows, or the institutions out there, even the precious metals funds. They're having outflows of cash from their funds. So they have to decide which ones do they sell, and the ones who have weak balance sheets and can't continue to charge forward with their projects. Those are probably the ones that they more think about selling. A gold, they just sit there and they say, okay, it's relatively safe, and they're doing
Yeah, yeah, yeah.
things, and they're progressing on a technical basis their projects, and they're on their business plan. They're progressing it even in the slow times like now.
Perfect. Thank you. In one of your press releases, you said that the lower production in the Parral, it's due to the transition between different zones in the tailing deposit. Can you elaborate a little bit or explain for the ones that are not familiar with the project?
Yes, we really have two groups of tailings. And the first part were, well, we called it Zone 1, or the Red Hill. And that was actually in 1980s that was trucked into this location from another mine. And it had higher values of silver and, slightly better economics. Now, that part of the tailing deposit, we've processed that. It's either we've sold the metal out of it or it's sitting in inventory, slowly being leached out. But then the remainder of the mine life is what's called, no, I had that mixed up. Sorry, that was zone two. The remainder of the mine life is zone one. And zone one, it's a lower grade, a bit better metallurgy, though, a bit better recovery rates. But, the margins are slightly lower on it. And that's, just the reality of the deposit. But still, even at these prices, it makes us a little bit of money. And when the metal price goes up, it'll do better. Another thing is that when you have an operation like we have there, we're always looking for other opportunities to add other tailings that maybe be higher grade. And you know, we have some things that we're working on, and maybe we'll be able to increase the grade of the tailings by bringing in some other external tailings that are much higher grade. So
Nice.
we look for those opportunities. We're always trying to optimize, and we're always looking for opportunities because
Hmm.
we've long since paid the capital back on Parral.
Of course.
Now we're just trying to get every dollar out that we can.
Nice, nice. Then let's go to the excitement. Let's move to the Los Ricos. Can you explain a little bit more detail Los Ricos as a project, and then we can go from north and south or south to north, depending.
Yes, in if I was trying to describe in very general terms Los Ricos, I would talk about a district that is a large district. And as I mentioned, it's really two districts separated by about 15 kilometers. But we're finding a lot of ounces. We've drilled about 200,000 meters of drilling since we entered the project in March 2019. To describe the ounces, I would say that they are both open pit and bulk
Hmm.
underground ounces, and but bulk mining. And what I mean by bulk mining, either if it's open pit or underground, um, wide widths of ore zones that can be mined very productively and at a
Low cost.
low cost per ton. Um, what's unique about the in Los Ricos North would be more open pit ounces, but your grade in general would be about various cutoffs. But the cutoff I think we would use at about 50 grams over equivalent per ton. It would be about 140 grams, and that, or in gold equivalent terms, almost 2 grams for an open pit at that grade. And strip
It's
ratios
high.
would it's a very good grade, and the strip ratios are quite reasonable in the north. In the south, we planned an open pit there as well, but as we re-examine this new piece that we've added on, we see the underground potential to bulk mine there. It has a higher strip ratio in an open pit scenario than the north, but the bulk mining potential underground, which still can be relatively cheap, versus say mining something that's a meter wide underground, or mining something that can be 30 plus meters wide underground. The cost obviously for the 30 meters is much cheaper per ton. There's one term in underground mining that's very, very important when you talk about a deposit, and it's
Hmm.
ounces per vertical meter. It's almost a term that would be synonymous with open pit mining strip ratio.
Hmm.
Because if you have, as you're going down in a mine, different elevations, if you have a lot of ounces per meter that you have to sink, that means you have a lot less development cost to get to ore tons. So we see Los Ricos South as having a very, very uh, good ounces per vertical meter. So it should be lower development costs. And then when you have wide, wide mining zones underground, um, your your dilution and dilution, you have that both in open pits and underground, but it's more of a factor in underground, especially if you're dealing with some of our peers who have ore zones that are only a meter wide, very high grade, but a meter wide.
Yeah.
If you're mining a meter wide, it's very difficult in a lot of cases not to get at least 50% of waste coming in on that blast when you blast it out, diluting that grade that you drilled with waste. You have to
Hmm.
be very surgical. Now, if we're going to be mining something 15 meters wide, maybe we're still bringing in a meter of waste, but that's 1 over 15,
Yeah, yeah.
not, you know, 1 over 1, not
Yeah, yeah, yeah,
100%
yeah, yeah.
dilution. It's like 6% dilution. So that's a big difference. And that's why having wide widths, you suffer far less dilution, and you can change the method that you're mining. If you're mining something a meter wide, it's very surgical. It's less mechanized. It's a miner
Mm-hmm.
with what's called a jackleg, a drill, a man holding it and drilling it. If you're mining something 15 meters wide, you do a thing called a long hole mining, where
Yeah.
it's more mechanized and much, much more productive and lower cost. Well, ours is that kind of 15 plus meter wide. And
Mm.
the big difference, and I'd like to really stress this point, we believe, especially in what we're adding, we have those kind of grades that people are finding in the meter wide, but in 15 meters wide. We have the wide widths and we have the high grades. That's a nice
That is,
combination.
it is fantastic, Brad, and I would like to thank you, I mean, for making this explanation because our podcast obviously it's about interviewing and knowing companies like yours, but as well it's an educational program, and then to have the attention or to bring the attention to people that it's learning or investors that are learning in the sector, and you bring the attention to some special points that most of the companies obviously didn't bring out or didn't explain because it's not one of their strengths. Um, Now we will talk a little bit more of detail between Ricos North and Ricos South. Let's just start with the South that has a more advanced story and have already a PAA for this part of the project.
Yeah.
Los Ricos South seems a very interesting project. The main characteristic that I could found, IIR of 46% at $21 silver, $1,550 ounce of gold, with, as you said, a main operation being an open pit, but have some underground as well. 5,000 tons per day mill with 11 years mine. All include sustaining cost below 12, which is a very good numbers in general, and above most of developing projects. Are you working now on a pre-feasibility study, or what is the evolution or the timeline for the next steps for the project?
Yes. So that was our PEA, and we are working on a pre feasibility study, which we're close. We were close to completing. The only thing is that we've had a new opportunity in Los Ricos South with the addition of these new claims, which we announced 2 weeks
Mm-hmm.
ago, called the Eagle. That was something that we were working on for well over a year. And why it's so important to us is that the structure where we defined 83 million ounces of silver equivalent, that structure is a regional structure that goes for tens of kilometers. And we had a break in our claim package where we had that structure. We defined 83 million ounces. Then it went off onto a contiguous claim, which we didn't have, for 3.7 kilometers. And then it went back onto our claims. So we really wanted to get that other 3.7. Now we got in there and we started drilling even in almost a due diligence phase. And while we were completing the agreement, and we were able to get some drill holes in. And we released those 2 weeks ago, where we had up to in excess of 70 meters at half a kilo and 12 meters of over 2 kilos. So we think there's the opportunity, and we'll have a lot more drilling coming out over the
Hmm.
every 2 weeks to define more and more of that wide high grade. Um, so you were back to the PEA and the pre-feasibility study. Um, we think it's going to change the opportunity so much, these new ounces, this new claim, that really we're reworking that pre-feasibility study that we were getting close to releasing. And we're going to come out we hope to come out in the first quarter of next year with a new
Okay.
resource incorporating those new ounces on that new claim that we added. And also, maybe at that time, we'll update the PEA, because that would be quite easy, maybe
Yes.
at the same time as a resource, because we want people to see the impact of these new high grade wide ounces. And we think there's a opportunity, to double or maybe even more of that net present value that we have in that current PEA. And also, we feel that by second quarter next year, we should be able to release that pre-feasibility study. And also, we want to apply for permit in the next 60, 90 days. And we'd hope that mid next year we'd have permit. And next fall, we'd actually start to construct the
Wow.
processing facility. So with this is a real crucial thing, or a real great opportunity that has happened for the company in the last 2 weeks, getting this new claim package that we have added on. It gives us another lever to pull in developing the whole district, because it's very high grade, it's wide, it should generate, we would think that it would generate a lot of cash flow quickly. And if we develop that first, that could be the catalyst that develops the whole district, Los Ricos North and Los Ricos South. So that is really our focus over the coming
Be-
years.
because
Year.
this not to for the people to get or to the audience to understand it, this new piece of land that it's closer to the south, or it's closer to the Los Ricos North, or it's in the opposite direction, or it's
Opposite direction. It's in Los Ricos
opposite
South.
direction.
Yes, Los Ricos South, we had a break in the claim package,
Yeah.
and we now have that break. We own it.
Perfect.
Yeah.
Perfect. Perfect. Then I guess that all of this will change, no? But the grades that you have right now, I mean, are in we are in the south, right? In the south, are just below 1 gram per ton, which is amazing for an open pit, but it might be concerning for the underground work.
Yeah.
What is your opinion? I mean, it all depends, I guess, of how will be this new drilling. Also, I could see that there is some historical underground levels. I don't know if you plan to use this already facility there, or what is your thoughts about this?
Yeah. It's actually 1 gram gold plus silver. So it's about two and a
Ah,
quarter grams gold equivalent.
okay,
And there was a operation already there in the last century, from 1908 to 1929. It was a famous family in the mining industry, the Daly family, who was Anaconda, out of the U.S. They operated a very professional underground mine there. They produced about 1 million ounces of gold equivalent. The new piece that we've added on was a different company. They did not have a large scale production, and it looks like it's all intact. The new
okay.
part we're finding. In the pre-feed or the PEA, the plan was to have an open pit around the area where it was already quite heavily mined, and below that an underground. So it will probably still in that area. It will remain that way. We would have an open pit. I think a smaller open pit and a larger underground,
Underground.
because Right now in Mexico, under the current administration, they're more readily giving out underground permits than they are open pit permits. To be quite honest, I think under the next administration, even if it's the same party, um, that may change. And we see that in the south, we could mine the whole thing underground,
Perfect.
and, or we could have a pit. But when you're looking at an open pit or underground, they're different in this sense. If I'm planning to do an open pit and I'm modeling that resource, which goes into the economic study, I will use lower cutoff grades for defining what will be ore, and
Of course.
and then it will bring down that overall average. If we're looking at it in the underground bulk mining sense, our cutoff for what rock we're going to leave behind and never move is going to be higher. So you could think of it probably in an underground or an open pit sense. Maybe we'd use 30 grams. Well, I'm gonna look. I'll talk here in gold. Maybe zero point 0.3 grams gold equivalent for a cutoff in an open
Cool.
pit sense, or even lower. In underground, we'd probably use more like 1.25 grams gold
Grams.
equivalents. And so the tonnage will go down and the grade will go up. And
Of
even
course.
re-logging what we already had in that study and using the higher cutoff grades and being more selective, the tonnage would drop, but the grade would go up substantially. And it would be we feel that it would be a very good grade for bulk underground mining, and moving from, your 2.5 grams more up towards at least your 5 grams. And there is a sensitivity analysis in the current study that shows that as well. But it was modeled as an open pit. That sensitivity analysis wouldn't be quite apples to apples, wouldn't be quite totally relevant, because we would model the resource differently if we're planning to mine underground.
Perfect. Perfectly explained.
Yeah.
Then just move to the north. The north, Los Ricos North seems massive. In terms of indicated reserve, almost double the gold or silver equivalent of the south. Los
Yeah.
Ricos North is a series of deposits where we can highlight El Orito and El Favor. Most interestingly, El Favor is open to depth and at east, showing the possibility to significantly increase the reserves of the deposit. What is your opinion about this part of the deposit, and how much do you think that can be extended?
I think there's a good opportunity to extend it, and I would say that it is the same kind of relevance as it's very similar to Los Ricos South, except that it probably has a lower strip ratio, a little bit broader zones
Hmm.
in Los Ricos North. I would also say that if you look at it and extending, especially Favor to the east, that's possible. And then you have to, corporately, you come to a decision. We're going to spend $25 million a year on exploration development, and you're going to say which those dollars being spent. Then the corporate decision comes in. And
Of
for
course.
us, we've decided that Los Ricos South is nearer term cash flow, nearer term to being a mine. If we spend a large portion of that 25 million over, say, the next 12 months in Los Ricos North, we're spending our capital on ounces that might be 15 years out into the future. So on a corporate level, we're saying, hey, let's direct our capital spend on exploration to Los Ricos South. Those ounces are going to be produced first. Let's find more high grade ounces in Los Ricos South. But in the same time in Los Ricos North, let's take what we have today, it's a large amount of ounces, and let's put those in a preliminary economic assessment so people can start putting a capital, or not a capital, well, yes, a capital number, and how we see the development. So the Los Ricos North and Los Ricos South are very similar. They're very similar in metallurgy. if there's any difference, I would say Los Ricos North, the zones are a bit broader, um, probably more amenable to open pit mining at lower strip ratios, but can still be underground bulk mined. We see as a company corporately that we want to spend our next capital dollars, exploration and development dollars in Los Ricos South, where the ounces are closer to production. And we want to fully develop that because it's going to be producing sooner. And we'll get back to Los Ricos North, finding more and more ounces, but in the future, because those more and more ounces are ounces that will be developed and produced maybe, 12, 15 years from now,
Hmm.
not developed, but produced.
Why not?
So near term dollars on near term ounce cash flow.
It's a perfect corporate strategy. I mean, for me, always that I look to the map and your news, and so I always thought if Los Ricos itself, it can be one massive district in a way that you can bring together both using the same infrastructure, or if you will put some infrastructure in the middle between the deposits in order to be useful for both mines, or if maybe you could through exploration and the deposit can be extended from north to south in some way. I don't know, what are your thoughts about this? How do you think that this will develop? Obviously you said the first you will go for the south, that it's closer to production, but are you thinking to use this infrastructure, processing mills or whatever, for later in the north, or for having both at the same times producing at some point?
Yes, we did look at that, and that's something it's a good question and makes a lot of sense. There's about 15 kilometers in a straight line between Los
Mm.
Ricos North and Los Ricos South, and actually, navigating a road between the two would be quite a bit further than that. So there is quite a distance as far as trucking, especially if you look at although the ore in the north is good values for an open pit. It's still not the high grade that you could truck for tens of kilometers. So we view them as two separate processing facilities, and there's be some synergy. Would be more along logistics,
Of
and
course.
maybe as far as when you're in production, one operational mill or sorry laboratory for
Hmm.
production samples
Hmm.
that you would have between the two projects, but they will be two separate processing facilities, in our view.
Good. There is any, I mean, because when I heard some interviews a few years ago, there was a rumor that you might sell one of the two deposits in order to construct the other. Is this something that it's on the table if someone arrives with a good offer, or are you guys planning to construct both mines?
Well, you control what you can control, and what we can control is being very focused on finding ounces, developing the deposits, and building them when it's time to build them. Which in Los Ricos South, we're moving quickly towards that. What we can't control is if somebody comes with a very good offer. From my experience in the past in selling deposits or selling companies, usually your best offers come when you're pouring the foundations because you've limited the risk
Yeah.
or reduced the risk. Um, in this case, these are very good deposits. We'll focus on getting them into production. I myself am the second or third largest shareholder of the company.
Hmm.
I think I'm well aligned with all of our shareholders. If somebody comes with a very, very reasonable offer, we'd obviously take it to our shareholders. And it's about returning good value for our shareholders. But
Perfect.
we can control building it. You can't control what happens in other people's boardrooms.
Perfect. Then, as a sort of summary to close this part, for someone that will invest today in GoGold, what they could expect to see in a year's time?
I think in GoGold in a year's time, we're going to have a new resource in Los Ricos South. We in a year's time we will have a pre-feasibility study. We hope to be in a year's time breaking ground and building Los Ricos South, building a mill. in Los Ricos North, in the coming months, we'll have a preliminary economic assessment. And additionally, in Los Ricos North or South, I'm sorry, you're going to be seeing a lot of news flow around drill results and more discovery. So really, the next year in GoGold is going to be very, very exciting, and with a tremendous amount of news flow. And really, that's what you can expect. We can't control what happens with commodity price, but if you're dealing with companies that are well financed, like we are, with 75 million US cash and no debt, um, with good technical expertise, we've built 4 mines in the past, and we have an operations team who are very, very good. A lot of experience in Mexico over 26 years I've been there. Um, then it sets you up for success. Those are really some of the qualities I think that your investors should be looking for in junior mining companies.
Perfect. Then we just go through a couple of questions about management and country. Okay.
Mhm.
Um, could you explain a little bit the Go Gold team, they experience? You said that you have experience in construction and exploration. Do you have all the knowledge that you need to perform the plans that are ahead this year and the follow ones?
Yeah, from a management perspective, high level management
Mm-hmm.
perspective, and a technical expertise in our operations team, we certainly do. That's not to say that we will not add people to the team. In January, we plan to go underground at Los Ricos South, and we'll bring in a contractor first to do that. But we will increase our team around supervision and supervision of the contractor as far as strong underground people. Now, in my career in mining, I've done more underground mining than I've done open pit. I've done both, but more underground. So it's nothing that we're not familiar with. Um, yes, we do have the technical ability. Obviously, we're going to grow the scope of what we're doing, and we'll be adding more people to the team. I'd say one other thing about GoGold, and operating in Mexico for 26 years now, what we quickly realized is that the expertise exists in the country. It has
Mm-hmm.
450 years of mining history, lots and lots of mining in Mexico. We don't have to bring in a lot of um, expats to
Mm-hmm.
operate our company in Mexico, where it's all nationals. There's
Okay.
only like 5 of us who are not Mexican out of 350 people.
Perfect. Talking about the country, no, some mining companies like Fortuna Silver had problems renewing some permits in Mexico. Is Mexico still a good country for the mining industry?
Yeah, in my opinion, I do believe it is. I mean, it's you'll have different administrations will come and go every 6 years in Mexico, but and the current administration, I still find that they're very reasonable to deal with in our operations. I would that particular case, I don't know all the particulars about it,
Hmm.
but it was resolved, and they did
Yes.
get their permit. And the current administration, they're you know, I don't know if their focus is as much around mining as other administrations. They have a real focus on anti-corruption, and I
Hmm.
think they've done a very good job there. And I see Mexico as a very, very good country to operate in. And most importantly, I talk to a lot of our institutional investors, and they still view Mexico as a very good jurisdiction to operate
You,
in.
you you told me before that 50%, roughly 50% of your shareholder are institutionals. Can you name some of them, maybe?
Yes, we would have VanEck, a
Mm-hmm.
very large institution, Franklin Templeton, Sprott Asset Management, um, Merck, CI Investments, Earth Resources out of Europe, Ixos out of Paris, Fourth Sale out of Sao Paulo, Brazil. So we're held very,
Yeah.
heavily institutional and around the planet.
Perfect. What do you think that it's the main risk for GoGold for developing these projects, and what you are doing to mitigate that risk?
Well, we'd have the normal technical risks that you'd have with any development project, and those would be, you know, metallurgy, resource estimates. But I think we've done a very, very good technical job to mitigate those risks. Construction risk, the normal. I mean, obviously, supply chain has been an issue for many companies as they develop mines right now. But we're working to mitigate those. Things like we would look for. It's a long lead time for, say, a brand new mill, the
Hmm.
actual mill. But we can look at the used market and rebuild as well to reduce that timeline. Um, Basically, I think we have normal risks that are mitigated by strong technical experience. Um, we're strongly capitalized. We have a good institutional following, to finance our projects that are well validated by our team. So there's always risk. This is not a low risk industry.
Investment, yeah.
But you look for the track record and you look for the project. And we have a strong project. We're not here trying to develop a marginal project
Yes,
that is very subject to commodity risk. A marginal project. This is a high grade project and should be low mining costs. So that's one of the risks that you can least control is commodity price. But the only thing you can do is to have high margin projects, very high quality projects, which is what we have in Los Ricos. And that mitigates that risk of commodity risk.
perfect. Thank you very much, Brad, for your time. It was a pleasure to have GoGold to the program. I hope to see the great things over the next year, and I hope that you can come again and share them with us. If you want the last minute to talk to the audience,
Yeah, I think thank you for your interest in the company. Uh, we've been doing this for a long time. We have a very experienced team in the capital markets. Our list of investors says a lot. They're very experienced investors in this business. And we have a strong projects. And the next year, 2 years is going to be very, very exciting for GoGold. We're entering a rapid growth phase in the company with a high quality project and a very strong balance sheet. It should be it should be rewarding for the investors.
thank you.
Este podcast no deja de ser un relato personal de mi camino para aprender en el mundo de la inversión de las materias primas. En este podcast vamos a intentar sacar contenido educativo, entrevistas con empresas y tesis de inversión para que juntos podamos aprender de este fascinante mundo del subsuelo. Si crees que el contenido vale la pena, por favor dale me gusta, suscríbete al canal y compártelo. Soy Amadeu Bonet, bienvenido a Charlando de Minas.